The issue that I'm concerned about is you're just making these bigger banks bigger and even more too big to fail. And that's problematic, right? So just be aware that the market, again, is sending us signals via psychology, via charts, that we are on the verge of a bigger move down. Once we get the CBDC to be launched, I guarantee you that within a week, a month, you will have regulation on crypto unveiled. Last week in the game plan, I shorted Bitcoin. I told you about the short using the BITI ETF. And again, we utilized that, and literally later that day, Bitcoin collapsed right back down for a great gain. And my point here is to message and let you guys know that I'm giving big time alpha here. All right, the idea is my analysis here you can take, and it's actionable information. As ADP added 296,000 jobs. That is a higher number than expected. Now, if we go down here, we can see on this article from MarketWatch that the increase in hiring was much larger than expected. Economists polled for Wall Street at the Wall Street Journal had forecast a gain of 133,000. So 133,000 is what it was expected. 296,000 came in. It takes pressure off the Fed about worrying about, do they need to stop hiking? Now, that brings us to the next big informational piece. Today, we have the FOMC policy rate decision. There's no doubt the market is pricing in a 25 basis point hike. The question is going to be, with what's going on in the regional banks, do they decide to pause after this? We know FRC, right? So FRC was taken over. If we look at the chart here, just absolutely crushed and annihilated here. And again, you can even see it's not really showing up the real chart anymore. But the bottom line is that was taken over by the FDIC. It was auctioned off to JP Morgan. The issue that I'm concerned about is you're just making these bigger banks bigger and even more too big to fail. And that's problematic, right? It's essentially not diversifying. The idea of having so many regional banks was that you diversify out in the US economy, the banking system. The more banks that get overall taken over by big banks, the less diversified you are. It means that when you have another 2008 scenario where you have this financial crisis, it's even worse because there are big banks, the government can't fail, and guess what? That means our tax dollars go to bail them out. Whenever it does happen, it's going to be even more money that needs to be printed or taken in terms of tax dollars to pay for the bailout. How does the market take this? If the Fed comes out and says, we're going to pause, does the market rally to the upside? I think initially that could be the result. So if the Fed does choreograph and tell us they're going to pause hikes after today in today's press conference, if he says something like we're looking to pause to see how things go, I do think the initial reaction of the market will be to the upside. And just don't think this is a new bull market, all right? Essentially what we're in this position of is that the markets could react positively to this announcement because the Fed is finally pausing, but then the markets are gonna look back and say, wait a minute, if the Fed is pausing, are they going to drop rates? The answer is no. Inflation is too sky high, and you're ultimately going to look for the markets to reverse. And I have it priced in that we see a 20% drop in the S&P, guys, by year end from here. 20% downside on the S&P. We have this scenario where you're seeing crypto run like Pepe and Gensler and all these other things. That is pure speculation and gambling. That is not a sign of a bottom. That is a scary sign that the markets, again, are telling you that investors are taking way too much risk. And when that happens, look back at Dogecoin and SHIB back in 2021. It was nearer the end of the move in crypto versus the beginning. Nearer the end of the move in the stock market versus the beginning. So just be aware that the market, again, is sending us signals via psychology, via charts, that we are on the verge of a bigger move down, even if we get a small pop on the FOMC policy statement today. You should never be an absolute bull or bear. You need to be a trader. All right, people fall in love with a narrative, and that's not okay. All right, yes, net on my macro, I'm still seeing downside in Bitcoin, potential for 12, 13,000, potential for 9,000. That's part of this bigger bear cycle that we're in. However, All right, I have gone long and short Bitcoin 100 times in between the bull market top and where we currently are, long and short. In fact, more trades on the long side. Because again, a good trader, you're neither biased to one side or the other. You trade the freaking level. If you have support and it's a multi-factor support, you buy the support. All right, you get the bounce, you exit, you say thank you very much. If it hits resistance and you have a multi-factor short signal, you short it and make money to the downside. That's how you make 100 times more than these hodlers that go long and just forget about it. Remember back when China basically banned Bitcoin? Why did they do that? Because they were launching their CBDC, the digital yuan. They wanted the digital yuan to get a foothold in transactions and be the king, be the top player in the CBDC, in the digital currency realm. Now that the digital yuan is being used actually as a reserve currency in trading, but with some of China's partners, they're now opening the doors to Bitcoin again. China's smart, all right? Whether you agree with them or not, they're smart. They understood that they had to make sure that the CBDC, the digital yuan, had the foothold. The US government is essentially taking almost the same play structure and essentially saying, okay, we're not gonna ban Bitcoin, but we're gonna keep things so fuzzy in crypto until we launch our CBDC, so that our CBDC will be used by big institutions and ultimately be used by the masses over a lot of these other digital currencies. Once we get the CBDC to be launched, I guarantee you that within a week, a month, you will have regulation on crypto unveiled, the Ripple decision will come out, all that stuff. You're in a range, 30,500, which by the way, I told you guys for the last month, for the last 2 months, we could get up there. That's your max upside in the near term. That's exactly where we got to over here. We pulled back to the low support of 27,000. We went up, now we're hovering here. Which way breaks? That's what I'm watching. As a technician, it's which line breaks. Do we break to the downside? Do we break to the upside? Whichever way we break, that's the way we're going to continue in the near term. A break of 27,000 sends us to 25,000. All right, a break of 30,500. There's this upsloping trend line right here. We would go attack that probably around 32 to 33,000. All right, I'm still favoring the downside. I still think this is a bear market rally. If we look at 2018-19, you had multiple 100% rallies off the lows of 3,500, even as much as a 200% rally, and ultimately we still went down and retested 3,500. So I'm not buying it yet. I know the masses would disagree with me. That's okay. That's been my life story with making big calls. The masses disagree. We obviously know the outcome of those. There's a new trend line to watch in the near term on Ethereum. If this line breaks right here, okay, and I'm gonna drag that out, you can see that line right there connects through this low and this low. If that line breaks, and notice it's a parallel with the one above, parallel lines are really important in technical trading, then you're headed down, likely a stopping point around 1,700, and then ultimately 1,500 would be your next spot. All right, so again, on the upside, your $2,125 is your resistance. That's your double top. That's your high pivot. That's what you're watching for.